Okay, it's 1 o'clock and time for the Wall Street Crossover Show, sponsored by Admiral Markets and with their market commentator Darren Sinden. Good afternoon, Darren.
Good afternoon, Zach.
Peace in our time? Rally? Everything okay?
You know, a big bounce.
I'm sure you would. I asked you as a sort of rhetorical question, possibly.
I will get nervous anytime we see an 11% range in one of the world's largest equity markets over a 2-day period, and that's exactly what we've seen in the Nikkei. And whilst today's news might be good news for the domestic Japanese economy, I think it bodes badly for the wider market, because that kind of volatility is it's just ridiculous and off the scale. Right,
and we saw that sort of rise before the German market collapsed. In the wake of the Greek news, I think, earlier in the summer. So let's see how that works out. But anyway, let's have a look at the first slide.
Okay, well, we start with the fact that the Nikkei rallied more than 225. Nikkei 225 rallies more than 7%, I should say, as Japan moves to cut corporate taxes. Corporation tax is currently around 35%. In Japan, the idea is that it will come down to about 31.7% by the end of 2016, and according to the briefing, hopefully be below 30% in the years thereafter. To my mind, it almost smacks a bit of desperation in terms of trying to stimulate the economy. After all, Abe was meant to be helping to raise taxes at some point to help pay down the ever-increasing national debt. Nonetheless, the market likes it. It's voted with its feet.
Well, the government must be desperate to reduce taxes to drive growth. I mean, that is just literally the last resort, isn't it?
Well, you could
they like taxing people, don't they, governments?
Yeah. It could be portrayed like that. Perhaps there's a clue in the next data point as to why they had to act, and that was the Japan machine tool orders number for August. This is a year-on-year measure that we're looking at here. I had to double check this 3 times because I couldn't believe it was correct. There was a fall of 16.5%, so a negative 16.5% over the prior period, and that was against the full. The prior period of plus 1.7, so no one was looking for that at all. I didn't find a specific forecast for the number, but it seems to have taken everybody by surprise. But it's been overshadowed by the bigger move in Japanese equities. There was also some more fiscal stimulus in Asia, or at least the plan for it. The Chinese government said that they intend to do some fiscal stimulus, and that was positive as far as Chinese equities were concerned.
Draghi there.
Well, yeah, I mean, we haven't seen too much in the way of fiscal stimulus, have we, in Europe? It's probably easier, perhaps, for the Chinese to implement.
Well, no, I was sort of saying that just trying to talk about it rather than actually doing.
Yes, yeah, exactly. Yeah, outline it, talk a good story. Don't actually have to put any money down or justify it. And in terms of European data, not a great deal out today, but the figures that were pertinent came from the UK. And we saw UK manufacturing production, again, this is a year-on-year number for July, disappointing here, minus 0.5% versus the forecast for plus 0.5% growth and the prior read of plus 0.5% growth, so not what we're expecting. And in the wider industrial production figure for July, again year-on-year, came in at plus 0.8%, again sharply lower than forecast, at plus 1.4%, and indeed the prior read of plus 1.5%. So, that's the third or fourth slightly negative data points we've seen in a row from the UK economy, and as we'll see in our last slide, that may give us a cause for concern going forward.
Yeah, so basically, even though the markets have rallied, the data continues to be bad or getting worse.
Yeah. I mean, a charitable description would call it patchy, I think. But
right. Okay. Well, let's move on to the European movers.
Okay. Right. Well, first of all, Ryanair. RYA, the ticker in London, €13.71, up 5.95%, but have been as high as 7% this morning and then made new all-time highs. And the reason is that they raised their profit guidance by a staggering 25%, thanks to strong summer growth. Now, in my memory, I'm sure we sat here only a month or so ago and talked about Ryanair and their sort of rather bearish outlook on the summer trading. Imagine how it's swung around so quickly in the space of 6 weeks. But nonetheless,
they obviously don't know their own business that well.
But that would be the influence, wouldn't it? That they don't have the insight that perhaps you would think they would have into their...
Or just being nice has actually paid off for them.
Well, perhaps there's something to be said for that as well. Anyway, that's what the market thinks, and that's where they are. And then Daimler, German auto manufacturer, ticker DAI, most famous for making Mercedes-Benz cars, obviously, €75.60, up 3.18%. They weren't alone in rallying. The whole German auto sector rallied on a more confident Asian outlook and the wider DAX bounce, but that stood out today to me as a gainer.
Okay, well, that's a bit of a flip from a previous couple of weeks, which is always nice if you're along with the market. M&A movers and rumours.
Okay, well, we're leaving the planet Earth in some respects here and moving into the world of space and satellite launches. And Aerojet Rocketdyne, which is ticker AJRD in the US, has offered $2 billion to buy a business called United Launch Alliance, which is a 50% owned joint venture between Boeing, BA, and Lockheed Martin, LMT. That's to say that each of those companies has 50% of that joint venture. Aerojet is a leading supplier of rocket engines for ULA launches, so it knows this business well. ULA itself was formed 10 years ago and has proved a highly effective but relatively dear platform for US satellite launches. 90 satellites, though, it's launched, and all of them have been successfully delivered into space, and that's just what the US government wanted at the time. Now, however, ULA faces competition from low-cost alternatives such as SpaceX and space exploration technologies. So there's a trade-off here. They've got US government's got a fantastic track record here with these guys for delivering what are very expensive bits of kit into space safely. Now they want to try and cut costs and perhaps use some of these alternative technologies. I think the idea is that if Aerojet can buy ULA, then that they may have a chance of making it run a bit more efficiently and streamline the process to allow them to compete with the new technologies. Of course, for the US government, if they go with SpaceX or space exploration, they run the risk of an expensive satellite blowing up on the launch pad or crashing into the seas at some point. So there's an interesting trade-off there between cost and effective delivery.
Obviously, they've checked their insurance policy just to make sure that it's a full working order. Right, let's go on to the data points.
Nothing really of any consequence today as far as US economic data, but there is an event on the west coast of America that will have both the tech journalists and the financial journalists buzzing.
Well, it's amazing. I think Apple's a significant part of the US economy. It's like 1% or 2% or something like that.
It's a very meaningful business, obviously the world's largest company by market cap. So it's their iPhone event, an annual event that they hold in San Francisco. What we're expecting from this today, well, we never know exactly, but there have been plenty of suppositions in the odd leak, but they were expected to show the new iPhone 6s, the latest version of the flagship phone, a new Apple TV offering, and obviously don't mean a TV there, I mean rather the box that allows you to stream content to your TV, and perhaps a larger iPad, been touted as the iPad Pro, suggested that this might come with a 13-inch screen, so it would be the biggest of the iPad family. But obviously we'll find out more this afternoon, and there'll be miles and miles of column inches written about this one.
And they'll be trying to convince people who bought the iPhone 6 to buy the iPhone 6s.
Yes, obviously, to trade up to the latest experience.
Even though it's only been a year. But I think probably what they could do is that with the wireless charging, that might actually convince people to, because it's so irritating, they might actually just say, oh, I've got to buy a new
if they can introduce those kind of technologies, and sure people will be looking for that kind of innovation, then they can probably continue to persuade people to trade up, yeah.
Okay, well, let's look at the pre-market movers and levels.
Well, staying in the world of US technology companies, and first of all, we focus on Yahoo, ticker YHOO in the US, $30.15, trading down around 2.5%. The reason is that the Internal Revenue Service of the US, the IRS, has decided it's unlikely to grant tax-free status to Yahoo's plans to spin off its stake in Alibaba, which is sort of halted that idea in its tracks for now. It's also fair to say that Alibaba itself trimmed its sales forecast, so now Yahoo's not going to be able to make these stakes been so attractive. It's also now stuck with a stake in a Chinese company that's reducing its sales forecast quite quickly. Yeah. So I think it's back to the drawing board for the management there. It could be worse, though. You could be unfortunate and be in the position of our next company, Flexion Therapeutics, that's ticker FLXN in the US. This is another one of these drug development companies. $17.95, down by a massive 38%. And unfortunately for Flexion shareholders, the company's flagship osteoarthritis treatment has failed midway through an FDA stage 2 test. It's not dead in the water, but that's a big setback for the drug, and they'll have to go back to the drawing board themselves there. And in terms of levels to watch today, as far as European cash equity is concerned, obviously we are better on the day, but that doesn't mean that we need to change our FTSE range particularly. So 62.12 on the downside plays 62.50 to the upside. We've tightened it, but there's still, the FTSE's got plenty to prove. For the DAX, it's a slightly different story, however. 10,400 now plays 10,500. We flagged 10,500 as the second of two key levels we wanted to see the DAX close above yesterday, so let's keep an eye on whether it can do that. In the US, wider ranges again, I'm afraid, because of the wild gyrations that we're seeing in US equity markets. So 1927 on the downside now in the S&P, plays 1971 to the upside. I hate to offer a 50 point.
Wide, aggressive range that we're in.
I hate to offer that, but it's not much choice. And in the Dow, 16,320 to the downside now, plays 16,510 to the upside. So again, a fairly wide range. Currency-wise, not much change as far as euro dollar is concerned. 111.77 now at a downside level, plays 112.12 to the upside. For the Aussie dollar, something of a recovery in as much as we're back above 70 now against the US dollar. So 70.10 will nominate as our downside level, plays 70.61 to the upside. For dollar yen, back above 120, not much happening. They're surprisingly muted, really, given the moves in Japanese equities today. So 120.18 now our downside level, plays 120.70 to the upside. And for cable, the recovery continues. 153.34 now our downside level, plays 154.08 to the upside. Whether we can retain this 154 handle, I don't know, but again, I'll be watching that one closely.
Surprising given the weak economic data.
Yes.
Right, in focus.
In fact, that last comment brings us on to exactly that point. What we are watching at the moment, the UK economy, are we losing momentum? I would say that because the OECD flagged, that's the Organisation for Economic Cooperation and Development, flagged that it expects to see slowing growth in the UK going forward in a paper it released yesterday. Today's soft industrial manufacturing production numbers may be a sign that there is some truth to this. The chart in the middle here plots the UK GDP growth rate since 2010 over the industrial production numbers. So there is a relatively close correlation between the two. The thing I think is interesting is that we still, as far as GDP growth, have yet to bust back above that downtrend drawn from mid 2014. And I also flag in the red ellipse the divergence between that appears to be emerging now between the GDP growth rate and industrial production. Sterling has been weak of late, as we've said. It's particularly against the US dollar, and it seems now that the UK won't be the first mover in US interest rates. I think Deutsche Bank flagged they thought Q2 2016 was the earliest time the UK would raise rates. So the thing to watch out for now, if you are on the bearish tack, would be any slowdown in the UK service sector, which would be a big issue for the economy, because obviously that's the driving force. Manufacturing, industrial production is very much second tier. That's marginal, perhaps, to the UK economic performance, but any slowdown in services now would be...
Do you think we might get away without it, actually? I mean, the services may remain...
Well, I mean, it could be, the services does enough to...
A new era, new paradigm.
Well, perhaps. I mean, we still do very well in manufacturing, the things we do, but services is certainly, the main thrust of the UK economy. It's true to say.
Okay, well, we'll see how that pans out. Darren Sinden, market commentator at Admiral Markets, thanks for co-hosting the Wall Street Crossover show today. We'll be back at 1 p.m. tomorrow.